So I thought that it would be helpful in advance of meeting next week for me to go through with you the advantages and disadvantages of operating a business as a sole trader. Now, as we discussed at the end of last week's class, operating as a sole trader is basically anybody who's carrying out business on their own account who has not incorporated as a company. So one of the main advantages of trading in this way is the ease of setup. It's very easy to start such a business. The only real requirement is that if you're going to use a business name, which is any name other than your own name, well then you must register under the business registration legislation. Also, obviously, there's ease of control. There's nobody else involved in your business. Profits are paid to you directly, albeit that you pay at the higher rate of tax. One of the main advantages is that there's no requirement to file an annual return with your audited accounts, which means that your earnings or lack thereof remain only known to yourself. However, one of the outweighing disadvantages is that a sole trader does not have the benefit of limited liability. What this means is that a sole trader therefore is responsible for all of the debts of the company, and these can follow him into his or her private assets, and if the private assets are not enough to discharge the debts, well then that can result in the sole trader becoming bankrupt. If you contrast this with what we discussed in the last class and the fact of a company, where the debts of the company are ring-fenced within the company, and shareholders are only liable for any share capital they've agreed to buy that they haven't paid for yet in the event that the company is unable to pay its debts as they fall due. Another disadvantage is it's harder to raise finance. And this is because it's not as easy to take collateral over a sole trader as it would be over a company structure.